The number flashes somewhere, and we are live. So,
Hi everyone. For those of you who've joined in, welcome to the webinar. We'll just wait a little bit to allow everyone to join in. All right, so I think we will get started. We've given everyone a couple of minutes to join in. And so, welcome everyone to the webinar for the IIMK Alumni Super Top Up Insurance Program. My name is Kiran. I am from PGP 10, and I am accompanied by Piyush Jain from PGP 11. And both of us will be your hosts today. And we have with us today Bodhayan Paul from Zopper as our guest. Bodhayan is the business head for premier institutions and corporates for Zopper. And both Bodhayan and his team are here with us today. And they will provide details of the program as well as try and answer all your queries that you have. So, in today's session, we are planning to have the session for around 90 minutes. And so we will start with the program background from Piyush. Piyush, as you know, has been instrumental in setting up this program for IMK. Then we will move on to the program details of the three policies that we have this year, and Bodhayan will take us through that. Towards the end of it, we will also have an enrollment demo by the Zopper team. What we're trying to cover today is basics of super top up insurance, what it means, how you should decide what to subscribe for, what kind of coverages do you need for yourself, how much insurance should you have, as well as go through the details of how is the IMK program really better than all other programs out there and why this is important for you and your family. And we will try and cover important questions throughout the flow of the presentation because we've been receiving a lot of questions on the various WhatsApp groups as well. And then towards the end, we have dedicated 20 to 30 minutes where we will take all questions from the YouTube channel and try and answer as many as we can. So, with that, I will now hand over to Piyush and he will take us through the background.
thank you, Kiran, and hello, everyone. This is the fourth year of the program. The program started in 2022 when we did. By that time, we did a lot of campaigns for a few fellow alums who were either hospitalized for chronic ailment for long duration. And what we lost few of those alums. Either their family were left financially weaker, or if they were cured, even then they were left financially weaker. At that time, a lot of discussion went into several groups, including our batch representative groups, and several of us got together during this time and came up with the best possible way to cover for bigger medical exigencies like upward of 20-25 lakhs. when there are problems, bigger problems, and it is difficult to get that amount easily, rather than very small ones, let's say for 1 lakh or 2 lakh. And we figured out that super top up was something that was the answer. And however, that super top up, what existed in the market was a bit different. So we, along with Zopper team, along with Care team, we redesigned the entire product specifically for IMK, and details of which we will share later. And when for the first time when we collected interest from alumni, we received huge interest from most of the alums. Now, over last 4 years, the product has been subscribed by just not IMK, but more than 30 national premier institutions like IITs, IIMs, and several others, with over 50,000 lives covered. So, as IMK and as Zopper, along with us, we created a new market where trust and group buying both became of the utmost importance for insurances specifically. And the product that we created keeping in mind two things. One is sustainability, long-term sustainability, and profitability. Mind it, most of the group insurances that exist in the corporates, they are generally loss making. However, this one is not loss making for insurer, so it attracts good insurers, as well as it becomes sustainable for a long term. So if you might have seen that corporates generally keep on changing insurer. In our case, it we may change insurer, but the policy will kind of remain same. So it becomes sustainable and not loss making. This is in general the summary. A lot of work went in the background, and over 5 years, the subscription for IMK grew from 600 alums to 850 next year to 1,000, and now we have crossed 1,200 in this year, with more than 5,000 lives or family members covered. We have three insurances to offer to this year, including super top up, OPD, and accidental plan. Now I'll invite Bodhayan and the Zopper team for a detailed session, knowledgeable session for you all. Feel free to message your queries in the comment section of the YouTube live, and uh, we will answer those questions at the end. However, during the session, me and Kiran will keep on asking the most important and the most common questions that you might have asked in one or the other group or otherwise one to one as well. Over to Bodhayan.
Yeah, thanks, Piyush sir. So hi, my name is Bodhayan. I head the business for Zopper for a specific vertical, and you would be happy to know that the vertical is named as premium institutions because of what we are doing in this space and corporates. Now, I am Bangalore alumnus, and I have 20 years of experience in crafting very innovative insurance products. Currently, we are sort of creating history with Zopper, and as Piyush sir highlighted, that the seeding thought had come from IMK, from where we have sort of grown really big in this particular space. Now, before I start and set the context, let me tell you that we are going to talk about something that you're not going to get anywhere. So whatever you are doing, please let it be. Please focus for the next 1 hour, because this might be one of the most valuable sessions that you would have pertaining to insurance. Because what we're going to talk about, you're not going to get anywhere. We're going to talk about three specific products. One is the hero product, or the super top up health insurance product. That has been like, this is the fourth year of renewal with IIMK AA. That's been the hero product. A lot of alumni have come into the product. They have claimed, or they have got benefited out of that product. And the product itself also has bettered. We'll talk about it more as we speak. The insurer is Care Health Insurance. This is the fourth year running. The numbers 1025 alums and 4250 lives, as spoken by Piyush sir. Super Top Up Health Insurance is a particular insurance program, which in the next slide I'm going to explain to you in a better way for you to understand. For the time being, just get this thing that it can cover yourself, it can cover your spouse and children, it can cover also parents and your parent-in-laws. So it's basically a very, very inclusive health insurance program. And when we talk about the coverages, you would see that this kind of a program is not there anywhere. Now, on the key improvements over last years, if you categorically look at what all things we have improved, there was a request on higher deductibles where we have basically added 15 lakhs, 20 lakhs kind of deductible slabs. I'll also explain what a deductible is down the line for you to understand. But currently, you might understand that higher deductible options are also there. Earlier, it was 3 lakhs, 5 lakhs, 7 lakhs, and 10 lakhs as deductible options. Modern treatments, which is sort of the in thing now, most of the doctors do recommend or at least ask you to give it a try, which is modern treatments. They were not part of the program earlier. Currently, they are covered up to 50% of your sum insured. And consumables, so consumables are basically rubber gloves, cost of rubber gloves, food, powder, and all those kind of things which in the purview of insurance, they are not paid by any insurance program. Roughly 3 to 5%, specifically in terms of the bill amount. And normally they don't get paid, but we have also included a consumables coverage where basically now almost 100% of your bill will get paid. Very interesting improvements this year. We'll also talk about the second product, which is the group personal accident product. Interesting product again, but you can cover only yourself and spouse here, and individually you can sort of insure them. And then there is the OPD program. The OPD program is basically a particular space which is not covered by the inpatient hospitalization programs like online doctor consultations, diagnostic tests. These kind of things are not picked up by your current Mediclaim until and unless there is an active line of treatment, which means that if I've gone to a doctor and then the doctor diagnoses something, post that I'm looking at the diagnostic tests, and then I get admitted to a hospital because of that, and then my treatment happens, then I can go back and claim. But suppose the doctor asks me to go for a couple of diagnostic tests, which I go, and then when I submit it back to the doctor says, okay, fine, you're okay, you're happy, then you can't claim it anywhere. So OPD is that space where you can claim these kind of things. We'll talk in detail about that. And the insurer is Aditya Birla Health Insurance for the OPD program. Super Top Up and Group Personal Accident, the insurer is Care Health. OPD program, the insurer is Aditya Birla Health. In the OPD program, you can cover yourself, your spouse, and 2 children. In a separate OPD program, you can also cover your parents or your parents-in-law. So that's in a nutshell about all the 3 programs that we have.
Thank you, Bodhayan. And I think one of the questions we've received a lot on the group is whether these 3 programs are independent. Can I take the rider without the super top up, for example? Can I take the OPD without the super top up? So if you can just share some more details on this.
So ideally, you can't take the personal accident because that's a rider until and unless you choose the super top up. You can basically choose the OPD program independently. So there is a small negative list at entry, and somebody who is having a cancer or a chronic kidney, we'll talk about that more when we pass through those slides. They can basically opt, so they're ineligible in the super top up. Hence, they will not get the personal accident as a rider, but they can independently opt for the OPD program and to an extent cover their doctor consultation and diagnostic tests.
Great, thank you. Let's move on to the details of the super top up then.
Sure. Thanks. So basically, when we talk about a super top up health insurance program, what is a super top up? Let's understand that. Ideally, you will have your base health insurance program, which covers you to typically 3-5 lakhs. Some of you might be covered up to 7 or 10 lakhs, but literally that population size is very low. What is very interesting for us to understand is that nowadays in post-COVID, the claim amounts have gone humongously high. Now, if I tell you that in one of the premier institutions, we had paid an upward a bill of 50 lakhs through one of these kind of programs. In another, we paid 35 lakhs. And if you ask me, we were never covered to that extent. We as human beings, we thought that 2 lakhs, 3 lakhs, 5 lakhs, that should be enough for me and my family and my parents and my parent-in-laws. So then, obviously, that's how we were covered only up to our corporate insurances. That's basically your first layer of health insurance program. Then so if I take a 1 crore base health insurance program, there might be some insurance company based on my health conditions might give me a 1 crore, but they might charge me 10 lakhs of premium for that, or say 7 to 8 lakhs of premium for that, depending on which age bracket I lie. But if I'm a smart, and we all are smart because we are from IIM, so what we should do is that ideally our cost should go down, and to bring down the cost, we need to build a top up over our base health insurance program. So on this slide, if I want to tell you that what should be the right insurance amount that you should look at, a health insurance amount that you should look at, you should understand that the right health insurance amount for you and your family is somewhere on a ballpark between say 30 to 50 lakhs currently. And when you choose health insurance, another rule of thumb that I would like to give to you is, through my experience, is that you don't choose the health insurance amount based on your current need. You choose it what you would need based on 10 years down the line. So 10 years down the line, if I need a 1 crore, I should be at a 1 crore today, because when I would need it at that point in time, nobody on earth is going to offer me that insurance program. So that's the rule of thumb. So if you look at the basic coverages, our corporates cover us up to 3 lakhs, 5 lakhs, 7 or 10 lakhs. A few corporates do that. Now, mostly parent and parent-in-laws are not covered in those programs. So there's that open risk space where they need more, coverage of insurance. And then if I look out in the market, there are two kinds of programs. One is a top-up and the other one is a super top-up. Both top-up and super top-ups are second-layer insurance programs, and they sit on top of your base health insurance program. What is interesting for the IIMK super top-up is you need not have a base plan as well. You can choose a deductible as low as 3 lakhs and say a sum insured of 1 crore. You will get covered up to 1 crore of claims in that policy year. The first 3 lakhs of any claim, or put together multiple claims in that amongst that policy members in that policy, you need to pay through your pocket. Give us the proof of payments, and then you can move on. So now for the super top-up program of IIMK, you do not need to have any kind of basic health insurance program. You can choose a deductible and simply pay up to that. Now, what is very interesting, and the difference between a top-up and a super top-up, is that in the case of a top-up program, you need to cross your deductible again and again. What is a deductible? That brings us to me to define what is a deductible. A deductible is an amount in the program up to which you will pay, beyond which the insurer will pay. So in my program, if I choose a sum insured of 1 crore and a deductible of 3 lakhs, which means that up to the first 3 lakhs, because the deductible is 3, I'm going to pay from my pocket, or I'm going to use any other insurance program, submit payment proofs, and beyond that 1 crore will get paid. So in the case of a top-up plan, just think it wisely that you need to cross your deductible again and again. How many times will you be able to cross the deductible? But in the case of a super top-up program, you need to cross your deductible only once in that policy year through one claim or through multiple claims. And once you cross the deductible, this Pandora's box opens up and you can come back and claim up to the amount of sum insured that you have chosen. Any questions, Piyush sir?
Yes, hi Bodhain. So I think
Hi.
it becomes clear that basic and top up are two different policies. However, there's a confusion among generally people. That confusion is around, for a super top up or a top up plan, I need to buy a base plan. Are those two linked? That's a very frequent question that keeps coming up. So if you can help us with that, it will be good.
Sure. Sure. So I sort of answered it, during what I said, that you do not need a base plan for this super topper program, the IIMK AA super topper program. You do not need a base plan. I have to choose two components here when I get into the program. I'll choose my sum insured or my overall coverage. And at the same point of time, I'll also choose my deductible, or the amount up to which I'll pay from my pocket or use some other insurance. So in our program, for example, say if you choose a 50 lakh sum insured at a 5 lakh deductible, uh, out of that 5 lakh deductible, you can pay through your corporate insurance, you can pay through your own insurance, you can also pay through your own pocket up to the deductible amount, submit the payment receipts, and then beyond that, up to next 50 lakhs for in that policy year, all your policy members will get covered in that policy for that. So the answer is you do not need to have any base health insurance program. This can work independently on its own.
All right. So essentially, these two names, base and super top up, are quite misnomer, and we should not just assume that these names mean they work in tandem, but they can work together for the same claims. Thank you, Bodai.
They can work together and they can work independently as well. That's how it is.
Oh, cool. Thanks.
Right. Thanks. If you move on to the next slide. Yeah. So this is basically a top up and a super top up claims scenario for you to understand it better. Like if I give you that in case one, there is a single claim of 12 lakhs. Now, what is the founding condition here? That the base plan is of 5 lakhs or I pay from my 5 lakhs. Both options are there. And the top up plan is of 10 lakhs with 5 lakh as the deductible. And the super top up is also of 10 lakhs with a 5 lakh deductible. So I have a base plan of 5 lakhs and I also have a top up plan of a 10 lakh sum insured with a 5 lakh deductible. Same for super top up. In the case of the first claim, which is a single claim of 12 lakhs, no rocket science. Since I'm crossing 5 lakh deductible through my base, the top up will cover 7 lakhs and the super top up will also pay 7 lakhs. Now, this is a very straight through kind of a scenario. If we look at case two, the two claims of 4 lakhs each, in the case of top up, I am not able to cross the deductible of 5 lakhs. So ideally, the base plan will pay say up to in the first claim it'll get paid up to 4 lakhs, and in the second claim the base plan might pay for another 1 lakh depending that all terms and conditions are met, but the balance 3 lakhs do not get paid because the top up does not trigger even once. In the case of a super top up, it's very simple. The base plan pays entire 5 lakhs and then the super top up picks it up because it's cumulative, the deductible. So 4 plus 1 being paid by in two separate claims is taken as a cumulative 5 lakhs deductible, and the super top up pays the balance 3 lakhs. So you see that straight away, if you're part of a super top up program, your chances of coming back and your ability to claim becomes higher, and your chances of claiming also becomes higher. Now, if I take about a case 3, where there are two separate claims, one claim of 7 lakhs and the other claim of 4 lakhs. Simple, when you look at the top up policy, in the case of 7 lakhs, the top up will sort of trigger because you cross 5 lakhs through your base. Top up will pay you 2 lakhs, but in the next 4 lakhs, in the example, the top up will not trigger. In the case of super top up, 7 plus 4 is 11, 11 minus 5 is 6. So the entire 6 lakhs will get paid from the super top up. No rocket science, you get paid more in terms of claims when you choose super top up because cumulatively your chances of crossing or reaching up to the deductible, the chances are way higher than trying to cross the deductible amount chosen every single time. That's the logic. Yeah.
Thank you, Pradhan. And I think two questions we've received a lot during this enrollment season. One is around how does a deductible work in case of a family policy? So I have a policy where I am enrolled, my spouse is enrolled, and I have two kids enrolled. So how does a deductible work? Is it cumulative? Does everyone need to have the same deductible? So I think that's one question we've received very often. And the second one is around how do I choose what is an appropriate deductible for me? So if you can help explain both of these.
Great. Very good questions, ma'am. So, on the first question, I would like to answer it this way that it's cumulatively, the deductible is cumulative. So, me, my spouse, my kids, part of one bucket of insurance program in IIMK. My two parents, part of the second bucket, and my two parent-in-laws, part of the third bucket. So what do I mean by bucket? That they can choose specific separate sum insureds and deductible combinations between bucket 1 to bucket 2 to bucket 3. So between me, my spouse and kids, if I take that example and say I choose a deductible of 3 lakhs and a sum insured of say 50 lakhs, the deductible, the sum insured is also sort of shared between all of us. the deductible is also sort of cumulative between the entire family. It does not necessarily mean that each one of us will have to cross 3 lakhs in the example and then we start claiming. It might be that my wife goes and claims up to 3 lakhs. I can submit her payment receipts and then I get hospitalized and then I get sort of avail the program from day one. So that's one part of it. And a very interesting question that you said. So I explained in my earlier talk how you should choose your sum insured or the rule of thumb. And the choice of choosing a sum insured would be 10 years down the line what you need. Now, if I go back to your question of how should somebody choose a deductible, preferably, choice of deductible is something that is very, very interesting, because if I choose, say, 10 lakhs now, depending on my, say, corporate insurance coverage and my own insurance coverage, then next year I lose the job and then I'm down from 10 lakhs to, say, 3 lakhs of my personal insurance coverage. And I go back to IIMK insurance program and try to sort of reduce my deductible from 10 lakh to, say, 3 lakhs, might not be allowed by the insurer, because it will be perceived as a high risk. So preferably, as I'm choosing sum insured, with 10 years down the line in mind, I should choose my deductible based on not exactly on how am I covered currently, based on how it is going to look like, when I am aged and I might not get insurance coverage adequately. So to sum it up, if I'm not in a government job, I'm going to lose all my corporate insurances at the age of 55 or 58, whenever I superannuate. And then suddenly I would realize that nobody is actually giving me an insurance program, and I might be down to zero insurance coverage. So ideally, I would say that if money allows, we should opt for the lowest deductible option that we are comfortable with. And for me, 3 and 5, these can be the only two options. 7 and 10 would be way high. For me, I might have to shell it out from my pocket, and then this policy might trigger. So that's my personal opinion, because I would want myself to get covered to the largest extent and pay, the minimal amount from my pocket. So that's the sort of answer.
Right. And I think our premiums for the super top up are relatively very, very low when you compare to the base policy. So this is something everyone needs to keep in mind. And even for,
Yes.
let's say, a low deductible of 3 lakhs and a high sum insured of 50 lakhs or 1 CR, the premiums are not something that will really burn on your pockets. So, like Bodhayan said, let's go for something which we are comfortable, let's say 10 years, 20 years down the line, when we don't have corporate covers and we need to manage expenses on us by ourselves.
Yes. Kiran ma'am, I would also want to add another particular thing, that definitely our premiums are very, very exciting. You can't compare this, with the market. But what I would want to draw the focus of the population, or the target crowd here, is very simple, that our program coverages are very, very unique. In the market, the wait periods on pre-existing diseases are 3 to 4 years. In our product, it is only 1 year. And show me a product in the market, where people can come in with heart diseases, with autoimmune disorders and with neuro disorders. So they are a strict no in the market. We allow them to get into this program with a 1 year wait period. So then the room rent restriction is a big leaking bucket. Normally, the market policies are at a 1% of sum insured. In our case, it's a single private AC room, which is where I need not worry about the cost. You just get into a hospital and ask for the lowest category single private AC room, and there are not going to be any proportionate deduction. There is no ailment wise capping, and there is no co-payment. When you look at these things, down the line, this kind of an open product, and also allowing people who genuinely need them, and also healthy people can also come in, and maybe we contract some severe disease down the line, that also stands covered. So the nuances, or the coverages in this program is way, way superior than we can actually look at anything in the market. A lot of alumni do a lot of research across all premier institutions. All of them come back and tell us that by far these are the best insurance programs. So just wanted to highlight parallelly that the coverages are also very superior, and the premiums are also very exciting.
And all thanks to the hard work of the Zopper team.
I think it's a combined hard work. Piyush sir led the effort right from the start. Anchit sir was there, and then you came into the picture, Kiran ma'am, and it's been a lot of guidance, a lot of to and fro. I would say that the product has got formed because of you guys, so all the credit goes to you. and then we have sort of leveraged it to other premium institutions. Let's be very honest about that.
All right. So with that, I think you've already started covering the features of the program. So up next, we have a little bit more detail on that.
Yeah,
I think
Piyush sir, do you have a question? Yeah.
yeah, I have a question which keeps coming again and again. I think a lot of people call me one to one as well. They ask on the group. Uh, so most of the time, what happens is the mindset that we have is I'll see what is the premium that uh, is there for different plans. By plan, I mean a combination of sum insured and deductible. As a buyer, as a conscious buyer, I say that I'll buy whichever is the least premium just to save on the cost. And I will increase the sum insured or reduce the deductible at a later point of time, let's say 1 year or 2 year down the line. That's a general thing that I've heard from many folks. Uh, how do you, the question is, how do we understand what sum insured and what deductible should we do and should we purchase, and how should we essentially is it advisable to change the combination at a later point of time because it saves money?
Right. So I'll take the second question first. So changing of sum insured, which means if I say I have chosen just to, for the sake of testing the program, I might have sort of taken a 20 lakh sum insured this year. And then suddenly something happens and I want to look at a 1 crore. Insurer might definitely come back and ask a question that, boss, what is the need? Because please understand that this is a risk game. But we can't play the risk game when we need it. That's the only caveat to this game. So anticipating or something happens in my family and then I go all out looking for insurance, that's called something which is prohibited. Adverse selection, it's called adverse selection, and it's not allowed in any insurance parlance. So ideally, when I'm okay, when my family is okay, and I look at a program like this, which sort of gives me the confidence, I should look at the highest sum insured and the lowest deductible. That should be. I now bring you back to your first question. 1 crore and a 3 lakh deductible. If I am allowed to take that, I should not look at any other combination. Now I'll give you my example. So though I am from IIMB, we roll a similar program there as well. So I was not covered for anything beyond my corporate insurance. My parents were covered with only 2 lakhs in their initial program. Now, after IMB, I'm covered for 75 lakhs at the lowest deductible option. But for parents, since their age brackets are high, the premiums are slightly higher. I have picked up 30 lakh sum insured at the lowest deductible. So, between the buckets, I can do the pick and choose, understanding how much of sum insured and deductible is required. But technically, for the first bucket, which is the alumni, spouse, and kid, that's the main bucket. Go for the highest sum insured and the lowest deductible if you're allowed to pick it. Ideally, our program does not restrict you from picking it, so you can. Until and unless you're part of any one of the 5 negative lists, which is any kind of cancer, active cancer, or not relapsed in last 5 years, any kind of active kidney, any kind of active lung, any kind of chronic liver disease, and any kind of paralysis. These are the 5 negative illnesses. If I am not a part of this and I have 10 more pre-existing diseases or even 20 more pre-existing diseases, which nobody on earth will take me, I can still get into this program with a wait period of 1 year on each of my PETs. And I can then sort of start claiming up to the maximum sum insured and the minimum deductible. Now, I also, when I was answering Kiran ma'am's question, I would like to draw your attention to the point that normally we don't pay importance to having insurance. It's a culture that, we don't focus on having insurance. Ideally, we should look at having insurance coverage when we are hale and hearty, because it is like an umbrella which is to be used. So insurance is that umbrella which needs to be used when it rains, but I don't get to buy the umbrella when it is raining. That's the timing that I need to look at. So that's my answer to you, Piyush sir.
So essentially, you're saying don't game the system because it is for a
Exactly.
greater good. Let's keep it for
And
the greater
evidently, you
good.
will
And
not be able to game the system. That is also true, because the moment insurer sees you as a high risk, they will not give you. So that's how
yes,
it is.
yeah, I think we have put enough guardrails and we are asking the right questions of pre-existing diseases and all to make sure that
Yes.
nobody games the system. All right.
Right.
Thank you. That's a wonderful question. But then coming on to the next question around deductible once again.
Hmm.
Why should I choose a 3 lakh versus why should I choose a 10 lakh or 15 or 20 lakh deductible? Who is comfortable with what kind of a person is comfortable with 20 lakh versus who is comfortable with 10 lakh?
So I'll tell you, I almost speak to every alumni associations and their alumni all across India, and I have seen that there are very high net worth individuals who have sort of picked up, say, 20 lakhs, even 40 lakhs, even 50 lakhs kind of coverage, or sort of on their own. And it's not their corporate insurance that I'm talking about. They have picked up this kind of insurance coverages in the market. Now, my suggestion to them, and when I talk to them and I look at their lifestyles, my suggestion is a minimum crore that you should look at 10 years down the line. Do you have it? The answer is no. So then they say that, boss, if I'm covered for, say, 40 lakhs, give me a higher deductible. I will never need a 3 lakh or a 5 lakh. And yeah, if they pick up a 1 crore at a 20 lakh deductible, their premiums will also come down. So until and unless we are in that high net worth individual category where we are covered for, say, 40, 50 lakhs, I will advise people to look at 3 lakh or a 5 lakh. 7 and 10 I can look at if I am adequately covered on my own personal sources. Please don't treat the corporate insurance as an insurance which is going to run lifelong. The biggest fallacy of a corporate insurance is, even one is, if I switch between jobs, that's not active. That's a risk sign which is there. Second is, even if I retire from the same company, the company might not provide me the benefits of carrying on the same insurance program. At times, migration happens, but they migrate me to a retail policy. They will not give me the same benefit. So I might find myself, looking for an insurance program frantically at the age bracket of 55, 58, 60, and nobody will give it to me. So preferably, and then again in this program, if I am at a 20 lakh deductible, the insurer at that age bracket might not also allow me to downward revise my deductible as well. So let's keep all the options in mind. If I am adequately covered for 50 lakhs, boss, then 20 lakh deductible is okay. If I'm covered for 15, 20 lakhs, I might look at a 7 or a 10 lakhs deductible, because another very interesting thing is our program is very open in terms of its purview. So most of the claim will get paid, not with the other insurance programs in the market. They will have ailment wise cappings, they will have co-payments, they will have room rent restrictions. These are the three biggest leaking buckets in insurance, and I might lose money there. So which might happen that I might have a 20 lakh coverage, but on the claim I might get paid up to 5 lakhs. But here I have chosen a deductible of 10 lakhs. So balance 5 lakh I'll have to pay from my pocket before this can trigger. So we need to take into consideration all the points, all my coverages, and then take a conscious call. My answer always remains highest sum insured, lowest deductible, because the price point at which the IIMK Super Topper plan is available, nobody on earth can give that to us. So that's my answer.
Right. And probably I can add to that, if a person is a high net worth to whom, let's say, 3 lakh or 5 lakh or maybe 10 lakh doesn't pinch spending every year on the health cost, they don't need to take that much amount as an insurance. They can fund it from their own pocket, right?
Hmm.
So that can become a deductible part. So if 10 lakh is not too high for you as a cost for each year spent, I think 10 lakh can be the deductible. I guess uh, that's how we can put it up, right?
Yeah, that also works.
Okay. All right. So I guess now we can move on to the next slide.
Yeah. So now when we talk about what this program covers, and this is sort of one of the most important slides. Uh, Typically, when I started the premise of the presentation, I talked about that you're not going to get it anywhere, which means that no medical checkups. We get both cashless and reimbursement facility with a wait period of 1 year on the pre-existing diseases, no ailment-wise capping, and no co-payment. Room rent restriction is single private AC room. And the available sum insureds starts from 10 lakhs, 15, 20, goes up to 1 crore. Deductible options are 3, 5, 7, and 10. And this year we have added 15, 20, and 25 lakhs as well. Daycare treatments covered, inpatient hospitalization, yes. Hospitalization as at home or domiciliary is covered beyond 3 days. Ambulance is covered up to 5,000 rupees. Waiting period. So in the market, the waiting periods on pre-existing diseases for specific diseases and pre-existing diseases are roughly 3 to 4 years. If I go for a program from the market, retail program from the market, in our case, there is a cooling period or an initial waiting period of 30 days, where other than accidental, injuries or accidents, nothing else is covered. From 31st day up to 365 days, I'll not get coverage for my already contracted pre-existing diseases, something which has got diagnosed before I got into this program. And beyond, after I come to my first renewal, everything is going to get covered on my PED part as well. You can, so if I've explained three buckets when I was talking to Kiran ma'am's question, one bucket is the alumni, spouse, and kids. You can choose a 1 crore sum insured day, for example, at a 3 lakh deductible. For the parents, might be a 30 or a 40 or a 50 lakh at a 3 or a 5 lakh deductible where you are comfortable. For parent-in-laws, again, similar. So you can choose separate set of sum insureds and separate set of deductibles across the three buckets that you have. The geographical jurisdiction is India. OCI cardholders and NRIs can opt into this program, but they will have to come back to India and avail the medical benefits, which most of them do, either ways. Yeah, Kiran ma'am, you have a question?
So one of the questions that we've been getting is on the modern treatment. And modern treatment is something that we've added this year. We were not covering it last year. And it is up to 50% of sum insured. So the questions are around what is modern treatment and why is it capped at 50% of the sum insured? What does that mean for me?
So I'll give you an example. Like there was a case for one of the alumni where it such happened that the alumni came back and registered a claim, and modern treatment, just like IIMK's, was not covered last year. So in that program also, modern treatment was not covered. And then when I looked at it, it was a heart surgery, a slightly complicated one. So I spoke to the alum myself and found out that the doctor was trying to push across the modern treatment surgery by saying that the chances of success there are higher. So I spoke to the alum and I said, "Did he tell you what chances of success?" And he said, "No, he said higher chances." Now, cut to, if the doctor himself or herself did the operation, the cost was roughly 8 lakhs. And the cost of the modern treatment was 18 or 19 lakhs, as far as I can remember. So ideally, modern treatments are getting recommended day in and day out, but they have a huge cost impact to the insurer, because anything which can be done at an 8 lakh, asking for an 18 or 19 lakh, so the overall cost of the insurer is also going up. When you look at this, we'll have to understand. So, moral of the story is, when I push back the alumni and say that speak to the doctor and see if the normal surgery can be done, the doctor agreed. The moment the doctor came to know that this was not covered in the modern treatment. So my question is, had it been, could the doctor do it earlier only? Why did the doctor push for a modern treatment? That's one of the scenarios. Now, in very complicated surgeries, modern treatment do come in, where robotic surgeries are basically used. And I completely agree to the point that yes, robotic surgeries have higher precision in the surgery, but then again, the cost might be a 50 lakh or a 1 crore or a 75 lakh. That kind of cost might come in. Again, a very high cost for the insurance company. So hence, modern treatment has a 50% capping on it, because we have to understand that vis-a-vis the premium that we pay, a single 50 lakh damage to the insurer will also create damage to the group, and also create damage to the insurer on both sides. So here the premiums might go up, the insurer might revise the premiums, the insurer also might be at a loss. So on one side, we agree to the point that yes, modern treatments are becoming important day by day. So hence we have come up with the option, but we also should remain prudent, because 80% of the surgeries recommended in modern treatment can be done in a normal way. So hence that prudence coming in with a 50% sum insured of sum insured being covered.
And what are some examples of modern treatments? You gave us one or two examples. What are some others as well?
It can be balloon sinuplasty. There are multiple kind of robotics, any multiple robotic surgeries. Nowadays, knee surgeries are also done by robots. So robotic knee surgeries, robotic heart surgeries, and those kind of specific things. So Ideally, that's on the screen that you can see. I talked about balloon sinuplasty. Then there is high intensity focused ultrasound, oral chemotherapy. At times qualifies depending on what happens. Immunotherapy comes in, robotic surgeries, then radio surgeries, bronchial thermoplasty, stem cell therapy. All these things are basically not covered until and unless we have mentioned it specifically in the program, because these are all part of modern treatments. In our case, these stand covered, and then up to 50% of the sum insured, and also 50% of the claim amount. So both things basically work that way.
All right. Can you explain this a little bit more? 50% of claim amount versus 50% of sum insured?
So I'll give you a scenario where suppose I'm covered up to say 20 lakhs of sum insured, and my modern treatment bill is 10 lakhs. So in the first case, 5 lakh will get paid because 50% of the bill comes in. But then again, I go into another modern treatment surgery, and so I am available to claim up to 10 lakhs because my sum insured is 20. So up to 10 lakhs, 50% of overall limit also I can claim. So in my next surgery also, in the next modern treatment also, I can claim the balance 5 lakhs. So that's how it is.
So I am limited to 50% per claim, up to 50% of sum insured.
Up to 50% of sum insured on multiple claims.
Got that. Thank you.
Pleasure.
Budhayan, you mentioned about single private AC room. I think when we go to hospital, there are a lot of rooms available, room categories. What is the meaning of single private AC room? At times, people go into a room which might say something else. It is single, it is private, it is AC, but it might be deluxe as well at the same time. How does it impact our policy or the claim? Can you elaborate a bit more on that?
Absolutely. That's a fantastic question, Piyush, sir, because that's a question where if you don't understand it properly, we might lose a lot of money from our pocket, because there's a concept called proportionate deduction which comes in. So what happens is normally 80 or 90% of the market has a 1% of sum insured as a room rent capping. So if I take that example and give you an understanding, it would be like if I'm covered for say 5 lakhs, so 5,000 rupees per day, which is 1% of sum insured, is my room rent limit. Now, if I go into a hospital and 99% of the hospitalizations are planned, so planned may I will go to the hospital and the hospital will show me the rooms. So when I say that I'm covered up to 5,000 rupees room, the hospital might show me a 5,000 rupees room, which is like a 4-bed sharing. And I, because of privacy issues, I might not like that. And then I tell the hospital, yeah, why can't you show me something higher category room? The hospital takes me to a 10,000 rupees room, which might be a private room with a single bed in it and an air conditioning in it. And I might calculate in my mind that 5,000 was my limit. If I go into a 10,000 rupees room, on an average, I'll pay 5,000 rupees extra from my pocket. If I'm in the hospital for say 5 days or 6 days, it's roughly a 25K or a 30K thing that I'll have to pay. But that is not how the billing happens. So the moment I shift from the 5,000 rupees room to the 10,000 rupees room, it's basically a percentage jump. So 10,000 over 5,000 is a 100% jump, which means if the cost of my ailment in the 5,000 rupees room was say 2 lakhs, now the cost of ailment in the 10,000 rupees room will become 4 lakhs. So what happens? The insurance company will come back and say, sir, I will only pay you up to your eligibility of room rent, which is 2 lakhs. Then suddenly my 25-30K additional that I had to pay, which was in my mind, suddenly becomes another 2 lakhs from my pocket, just because I did not understand the concept of room rent capping in a much better way. So in the IIMK Super Topper program, the way we have designed the room rent is, first, there is no pricing amount to it. So a single private AC room in Bangalore might be 10,000, in Mumbai might be 12, in Delhi might be 8, in Kolkata might be 6. But then we have taken that problem out. When we go to the hospital, we will have to ask to the hospital the lowest category single private room or AC room, and they will take me to that category. So less confusion and very specific. So if they take me to a deluxe room, I would know that much, that it is not a single private AC room, and I will also know that if I get into the deluxe room, I might have to pay a proportionate deduction in the way that I have explained. Am I able to answer it?
Yes, I think to conclude, if I may say, all the cost of the services in a hospital, which includes service of the doctor, that is consultation, service of the operation room, which is OT charges, and several other similar kind of charges, which count as service. They are tied to the room rent. If you go to a higher room, doctor's fees increases, surgeon's fees increases, OT room charges increases, and hence your hospitalization will also increases in the same proportion, and that will also amount to a reduction in your claim amount, because you will pay the increase as a percentage increase, not just in the room rent. So I think so. This is very, very important while we make a claim. I think one of the claims we faced this, and alumni ended up paying a higher amount from the pocket as well. So thank you for the explanation, Bodhayan. Let's move on to the next slide.
Thank you. So this is one slide, and you will have this presentation. This is basically what I have been emphasizing all throughout, that IMK, the program, is by far superior. You see all the red lines; they are sort of programs, retail programs available. The first basic interesting thing about our program is that if I declare diabetes, hypertension, cholesterol, three things, the market might come back and increase my premiums to 60-70% of what they have quoted. So ideally, the retail insurance programs do not operate in the way that what you see the premium is what you pay. Based on my medical test, if there are some pre-existing diseases which comes up, they might come back and deny. And as well, if they accept, they might come back and increase my premium manifolds. In the IMK Super Topper program, the premium doesn't change irrespective of how many pre-existing diseases I declare. That is phenomenal because that is not how the options are available in the market. At the same point of time, it allows people up to 85 years of age at entry and coverage up to lifelong. The market stops beyond 50, 55, very difficult to get hold of insurance programs. So, on one side, we're taking care of the alumni, spouse, and kids. We are also equally concerned and taking care of the parents and the parent in laws who are in that risk bracket where they would need more insurance coverage. This is not available anywhere else. Even if you would find insurance companies in the retail market asking that yes, we cover up to 90, they will make you pass through a medical test and eventually they will come back and decline. That's how the market works. In our case, there is no underwriting. There is only a single negative list at entry. And beyond that, if I qualify, I can come in with whatever PEDs I have with a wide wait period of only 1 year. So that's how phenomenal this program is.
Bodhayan, both you and Piyush explained about the single private AC room, but I also wanted to draw attention to the fact that this year we've been able to manage different room categories in case of emergency hospitalization. And we've just had a similar question on the live, which says, what happens if the hospital does not have the lowest price single private AC room and it is an emergency hospitalization?
Yes, that's a fantastic question, Kiran ma'am, and this is a new addition this year that we have. That in case the alumni actually can prove, and nothing to prove, there'll be an investigation at the back end, and it would come out that if it is the case, I would rephrase this way, that if it is the case that there actually a single private AC room was not available, and the alumni goes to the next higher category room or to a higher category room which was available, there would not be any proportionate deduction. That is agreed with the insurer.
And this is a new addition we have this year. We did not have it
Yeah,
last year. So we are
that's
continuing
right.
to improve the conditions of the policy for everyone.
Yes, absolutely.
Thank you.
Right. If we can move on to the next slide. Okay, so this is the negative list that I have been harping on. If I have any one of these or multiple of these, I cannot get into the program. An active cancer or cancer cured less than 5 years ago. If cancer is cured beyond 5 years, I can get into the program, but it will be subject to a small underwriting where the underwriter will evaluate that and check on that it's got cured beyond 5 years or not. Any kind of benign tumor, all chronic liver diseases, all chronic kidney diseases, any type of paralysis, and any chronic lung diseases. If I have any one or multiple of these, I will not be able to get into the program. as an alumni, but I can bring in my other family members into the program. The tech part, which you will see sometime later, is designed in a way that even if I am not eligible, I can pull in my family members into the program. So let's move on. Yeah.
So I think this one is one where there are a lot of questions from the group.
Okay.
And so you explained that cancer has to be an active cancer or cancer cured less than 5 years ago, then you're not eligible to enroll. If cancer
Hmm.
was cured more than 5 years ago and has not relapsed, you are eligible to enroll.
Correct. That's
A
correct.
common question is that for the other diseases here, which are on the list other than cancer, if the family member suffered from the disease and was cured, so can they enroll? Can they not enroll? Is there a time limit there?
So the idea of getting diagnosed with something and getting cured, the insurance market does not work that way. The insurance market works with the diagnosis point of view. So if I have got diagnosed with a chronic liver disease, say, or a chronic kidney disease, and I am hale and hearty now, insurance company will still deny me, or care will still deny me entry into this program because it's got diagnosed. So ideally, it's very difficult that a chronic kidney or a chronic liver sort of reverses to a good kidney or a good liver, and then unless I have a surgery, which sort of replaces that. But other than that, it goes by diagnosis. That's the bottom line. So if I have got diagnosed of any one of these, it's a negative list. And from the pre-existing disease point of view also, that if I have got diagnosed of anything as a pre-existing disease, I am under medication, I have a prescription where a doctor has written that you have diabetes, hypertension, cholesterol, for example. In that case, I need to declare that. So our program is a declaration trust basis program. There is no medical test, but I need to declare of whatever diagnosis has happened. So I just elaborated slightly more than your question.
Thank you. So basically, anything on the list ever diagnosed constitutes the negative list.
Constitute my list of declaration, and if it matches with anything here, that sort of does not allow me to get into the program.
Enroll. Yeah.
Yeah.
Yeah, just to, I think, a bit more elaborate on this, I think now we are in insurance and medical for a very long time. So, to understand the basics is, let's say somebody had a heart ailment, a heart blockage. The surgery may remove blockage, or the surgery may widen the arteries for the blood to flow, but that blockage remains there. So that means the ailment has not gone. What the uh, uh, what is happening during the treatment or the surgery is that they're kind of bypassing or making things better for us to live a longer life by taking care of that ailment. It's not that we are uh, cured of that. So we end up listening that, we got cured of something. Let's say somebody had liver diabetes, and the person is taking diabetes medication. So the diabetes medication, metmorphin, essentially, is controlling your insulin production in the body. It's not getting rid of the diabetes at all. So you're not cured of diabetes. So that still remains a disease or a pre-existing disease. So we should not use the word cured. We are cured of cancer, or we are cured of heart ailment, or we are cured of diabetes. Rather, we should say we are in remission because a surgery happened, or a treatment happened, or we are taking medication. I think that will make the misconception clear that we are not cured and the disease still exists. And apart from the insurance concept, I think we should keep on working on our health to improve or to at least manage that ailment or disease. Yeah. Over to you, Badan.
Right. Absolutely right, Piyush sir, on what you've emphasized. And thanks, Kiran ma'am, for your question. So let's move on to the next slide.
I think
Uh,
before we let you move on, Bodhayan, we have several questions which come on the exclusions and on the PEDs. So we'll spend a little bit more time here.
Sure, sure.
And one question typically is, and this is for renewals, not new enrollments, that if I have a disease which, so I have already declared my pre existing diseases when I enrolled, and I was diagnosed with something after enrollment.
Hmm.
So do I need to declare it again when I renew?
Very good question, Kiran ma'am. So ideally, the declaration is for all pre. So that's why it's a PED, pre-existing diseases. Whatever has got diagnosed before me getting into the program or enrolling into the program needs to be declared. So the concept of insurance is either ways. Anything which is sort of diagnosed post me getting into the program is by default covered. So I need not declare that.
Which is why I think it's also very important to make sure that we're continuing to renew the insurance, because the minute we don't renew, we will have to come back again as fresh enrollment, declare all PEDs again, and again go through the wait period and the exclusion list. So I think I would like to really emphasize that renewing insurance year on year is really, really important for us.
Yeah, so yeah, any kind of diabetes sort of you can come into this program. I could see a question to the corner of my eye, hence I responded to that. Yeah, that's right. So I have also seen couple of cases, and not to pinpoint, but we have seen alumni coming and sort of saying I forgot to update my pre-existing diseases last year. So one request to all the alumni here is that we know of what medications that we take. We should be very proactive and out, forward in terms of declaring. That's the only requirement that the insurance company is asking. There is no point in not declaring anything. Whatever we have, let us declare, because 99% of that is either ways covered in the program. There's nothing to hide. And if I have any one of these chronic ailments, I know that I have it. I can't sort of miss it. But my request to all the alumni is, if you're coming in, please declare all your pre-existing diseases. That is sort of gets printed on your insurance program. And please understand that insurance is a legal contract. The policy that you have is a legal contract. So what you declare, if it is printed on the policy, as an exclusion for 1 year, that means beyond that, that's covered. So what else would you need? So please come back and declare in a much open way, and declare in the first year itself. Whatever has got diagnosed on the PED as a pre-existing disease, please declare.
All
Okay.
right, thank you. Piyush, do you have more
Hmm.
questions or can we
Yes.
move to the
Uh,
next?
yes. I have one question, which is about, I think there's one ailment, diabetic and hypertensive kidney disease. There was one question about gestational diabetes as well. So the question is more around, is diabetes covered, not covered? Is it negative? I think this one is confusing. Diabetic kidney disease, hypertensive kidney. Can you
Hmm.
elaborate on that?
So ideally, so diabetic kidney disease might be, and this is just my interpretation. I might be wrong, but if I think out loud, diabetic kidney disease might be that the kidney has got damaged to an extent that it is irreparable or it has become chronic, and diabetes might be the leading factor behind that. So diabetes and hypertension are primarily tip of the iceberg for every illnesses that we have. That's how it happens. 95% of the illnesses are because of these two. So let us understand that diabetic kidney, or a chronic kidney due to a diabetes, we will have to go by the fact that it's a chronic kidney case, and then that's a part of negative list. Diabetes, only diabetes by default, yes. I can come in with that. A lot of people, India is called the diabetic capital of the world, so many of us are diabetic, and in that case, we know we talked about metformin. So if you are having it, so we know we are diabetic. But if I have a diabetic kidney in that case, I need to understand whether it's a chronic kidney case or not. If I'm not sure, I can declare that, and then the underwriter will come back and ask few questions, and maybe few documentation exchanges on the reports, and we might come back with an answer as a yes or no, whether the person is allowed or not.
So essentially, diabetic kidney is not diabetes itself; it's kidney failure because of
Correct,
diabetes. So essentially,
correct,
kidney failure is part of negative list, not diabetes per se.
correct, correct.
Okay. And I guess gestational diabetes and all other kind of diabetes are not a part of the negative list.
That's right.
Okay. All right. Are ailment like hypertension, cholesterol, uh, thyroid, these are very, very common ailments. Uh, are these also pre-existing diseases?
Yes. So, hypertension, cholesterol, thyroid, hypertension, sorry, yeah, diabetes, all these things. So we'll have to understand that pre-existing diseases, what are they basically? So they are those which will or might have an underlying effect on the other illnesses. Whatever we named do have underlying effects on all the illnesses. Any kind of surgery is done, we should sort of declare them as pre-existing diseases. Very interesting to understand that I had a cut or I had an accident. Should I declare that? My bone got deformed. Should I, due to that accident, and then I had to place a metal thing? Yeah, I can mention the metal part, but accident need not be declared because there is no likely chance of accident having any effect on any other thing or affecting any other thing. But if I have a diabetes, if I have an hypertension, that can definitely come back and affect many of my organs. So yes, we should declare diabetes, hypertension, cholesterol, thyroid. These are the four pillars on which the entire illness system is sort of established. We should definitely declare them.
Right. So, okay, just to add, we also have a PED declaration guideline document, which is there in the
Hmm.
Google Drive folder where all the details are there. So, I would uh, strongly suggest each and everyone to read through that
Pardon me.
and understand what PEDs are, how to declare, what to declare, and what not to declare, and why to declare as well at the same time. So I think these are some of the very important questions that are coming to all of us. I think now we can move on to the next slide.
Sure. Okay, the next slide is basically on the claims process. Yes, both cashless and reimbursement facilities are available. So for the cashless claims, you'll have to go to the network hospitals, document to be submitted at the TPA or the insurance desk of the hospital, and you do get in touch with Zopper. For the reimbursement also, for cashless, you can go to network hospitals, which are part of the network list of care. You can sort of get it, Google Care Network list. You would get that list. You need not have to, get it from us. For reimbursement, you can get into any hospital and then you can pay and then come back and claim it back. Claim intimation for reimbursement should be within 7 days, and for cashless also within 7 days from date of admission. Normally, cashless triggers faster. This is primarily for a reimbursement that within 7 days of date of admission and submission of documents within 30 days of discharge. But what is very important is that you have a support line or a support line where you can basically fall back on, and that is the Zopper's people who are basically available for you. Do you have the email ID of Zopper, which is imkhealthplan@zopper.com? We have you in the next slide. You will see the entire network of people whom you can get in touch with me being the highest level. We would try to help you in whatever scenario you're in because that is claims to matter, and claims is the one from where you will understand the importance of this program. Kiran ma'am, you have a question?
No, I don't have a question. I think next we have a little bit of our learning put together, and we'll ask Piyush to take us through this in detail.
Thank you, Kiran. Thank you, Budayan. So this is essentially this slide. It's kind of a repeat, but we want to stress upon the fact that all of us need to understand why we are doing this and why it is important for all of us. The insurance is just not about like coverage or getting some money. It's more about peace of mind. If you have covered yourself and your family member, at least you don't need to worry about uh, costs involved when somebody in the family gets hospitalized. Risk is unknown. You never know who gets what kind of diagnosis. It is just not cancer. It can be an accident. It can be any other ailment. And one of the reasons is we generally don't get tested. We don't do regular checkups, which we should do. Uh, that's generally the behavior for most of us around. So events become more known if we do diagnosis, but however, taking our own behavior, events do happen, including deaths, accident, and any other diagnosis. And there can be a recurrence of disease. If your cancer is kind of cured or remissioned, it can reoccur. We should start covering ourselves as early as possible, because at a later point of time, as Bodhain said, you may not get a policy, and at that time nobody would like to cover you. Or even if there is a coverage, let's say a small coverage, if you go for a higher coverage at that point of time, the increased amount will not be a part of the coverage, that will have a waiting list at times. So remember, premium should not be our primary indicator. It should be what are the features that are covered, and how much we are getting covered, rather than what is the premium or how late uh, we cover ourselves. Ideally, it should start as soon as possible. Regarding PED, we discussed on the PED slide that we should declare as much as possible. For that, I think my advice is that document everything. You should have something, every document, which includes discharge summaries, prescriptions, invoices, bills, any payment receipts, diagnostic reports, into Google folder for each and every family member. Even though the ailment might be very small, let's say a simple illness, simple fever, or let's say a consultation for thyroid. If you have those documented, you have proof for yourself and for your health, just not proof for insurance, but for yourself also, how you improved over a period of time, or how your body degraded over a period of time. So just not for personal thing, but for also for insurance thing, we should document each and everything. Because from insurance perspective, if we don't have a document, it becomes kind of a non-disclosure. So where the end result can be either the policy is cancelled or your claim is rejected. So so please document everything and declare everything. Yeah, I think this is what I wanted to stress upon for each of us. We can move on to the next slide. Over to Bodhayan.
Yeah, thanks, Piyush sir. So we talked about Super Top Up so far, the hero product, and this year we have brought in a group personal accident program also. This is basically a rider. So when you choose the Super Top Up, you will find an option to opt in and opt out of group personal accident. Ensure you opt in because the pricing is rock bottom. You can cover you and your spouse on that. Let's move on to the GPS slide back. Can we quickly go back to the previous slide? Yeah. So your accidental death coverage is 1 crore in this. There are couple of PPD and PTDs which are covered, but what is very interesting and which normally other GPA programs do not cover is your funeral expenses, home modification. So I met with an accident and basically I need to create a ramp in the house, no, for taking my wheelchair or something like that. I can cover it up to 25,000. Burns cover for minor burns. Neither the hospitalization takes me in for 24 hours, so I can't claim it in there. I can't claim it anywhere. So burns covers up to 10,000 rupees can be paid. Child education. So if the alumni passes away, 50,000 rupees can be paid per child, maximum up to two children. So all these things, and also temporary total disablement, TTD, if you see. So in that case, 10,000 rupees per week for a maximum up to 100 weeks can be paid. So in overall, in a nutshell, it's a very, very efficient program that is got designed for each one of you. You can take GPA only for yourself as an alumni and your spouse. Separately, the premium is only 2250 per person, excluding tax.
All right. Thank you so much for that, Bodhayan. And I think some questions which may come to mind are what are examples of, let's say, permanent and temporary disabilities? And also, we have here written that it is up to 100% of sum insured. So it is not 100% of sum insured, but up to 100% of sum insured. So if you can also throw some
Correct.
light on that differentiation.
So there is a table which comes into play set by the government of India on this particular thing. It's called Table A, B, C, and D. If I lose one finger, there's a separate component which gets paid. If I lose one finger and one eye, there's a separate component which gets paid. So one finger, one eye, one leg, then a separate component might get paid. So these are certain tables which are there. Ideally, if I explain to you in terms of like, if I talk about say temporary total disablement. Temporary total disablement can be said like I was driving, I met with an accident, and I have a spine injury. Now, because of that spine injury, there's a total disablement. I'm not able to move. But it is temporary on the ground. The doctor comes back and says that if I do proper physiotherapy and maybe a couple of surgeries, there might be a chance for me to, sort of walk back. And in that case, what happens is, in this case of a temporary total disablement, first my leaves will get exhausted in 30, 40 days, whatever are my leaves. Beyond that, I would go into loss without pay. So in this case, it really helps. This program really helps because I'll get paid for 10,000 rupees per week for a maximum 100 weeks, as long as my temporary total disablement, if it continues up to that long. When an individual, I am completely unable to work. I am employed because my employer has not asked me to go. But at the same point of time, I am sort of not getting paid because I'm not working with them. I'm not contributing. In that case, this temporary total disablement cover really works. So ideally, uh, in the market for a group corporate personal accident programs, the coverages are more towards 5,000 rupees per week for 52 weeks or 60 weeks, something like that. In this case, we have also increased the quantum, which is 10,000 rupees, and also increased the maximum number of weeks where it can go up to, which is 100 weeks. So this is one example of a TTD. Permanent total disablement might be, a condition where an individual is completely unable to work for the rest of their life. Uh, or permanent total disablement may, it can also come into loss of limb, loss of eye, because I lose those organs completely and permanently. So based on that table, again, this particular coverage might come in. So as I explained, Kiran ma'am, that on any other group personal accident program also, you would find an accidental death coverage, which if my death happens because of an accident, that amount is going to go to my nominee. A permanent partial disablement or a PTD or a TTD normally gets covered, not to the extent to which we are covering maybe, but it does get covered. But the additional things which are here, like a home modification, a burns cover, a child education cover, these are certain things which are not there in most of the insurance programs, the personal accident insurance programs. So in our case, what we are saying that the alumni may not die, but then still can make some claims out of this program. And if the alumni dies, then entire attention. Say if I give you the example of a child education, and that goes to the back burner, right? The alumni has passed away. There are a lot of loans to be set, a lot of priorities, and then suddenly child's education, it hits the family. From where do I arrange for that money? In this case, 50,000 to be paid for maximum up to 2 children. That's a phenomenal cover, I would say. Understanding the premium that I pay, so that way.
Great. Thank you, Badhan.
Thanks. Let's move on. Yeah. So this is the third program that we have come up with. And if you remember, I defined an OPD program as a program where basically it doesn't get covered on the inpatient hospitalization because there is no active line of treatment on that. So an OPD is a Pandora's box. It can open up in multiple ways. We have created a product, where you can enroll yourself, spouse, 2 children, and any one of your parent or parent-in-laws. Now, these are two separate buckets, two separate premiums that you would pay. For you, spouse and kid, one, and for your parents or parent-in-laws, another bucket. There is no negative or exclusion list. So please understand that super top up, I can only get in if I am not part of that negative list. OPD, there is no negative list. If I have a chronic or critical illness as well, I can get into this program. But what are covered in this program? Doctor consultations and prescribed diagnostics. Up to sum insured, in this case, your wallet size is 30,000 rupees. In one program, which is alumni, spouse, and kids, you pay 5,000 and you get wallet amount of 30,000, where you can reimburse them in terms of doctor consultations and prescribed diagnostics. Reimburse it would be the wrong word. You can avail cashless through an app. Our service partner is Visit. Once the policy gets issued, you can see your details in the Visit app. You can book appointments through the app, doctor consultations and prescribed diagnostics through the app. There is no reimbursement available here. It is only cashless that you can avail, and it's your call based on, if you so you can impanel doctors, but it takes 24 hours for that to happen. You also can't parallelly use it for both of your or three of your members. One member has to complete the service, and then you can come back and start availing on the other thing. So OPD as a product, sort of is evolving. We have tried to create a bucket where a lot of alumni are benefiting across. And if you look at the pricings, I talked about 5,000 plus GST on the alumni and immediate family, and for parents or parent-in-law, it is 10,500. In both cases, you get a wallet size of 30,000, and only doctor consultations and prescribed diagnostics are covered. Age limits, sort of, through the roof. No problem with the age limits. You're on mute, Piyush, sir.
Sorry, there's an issue with the mic.
Yeah.
This is a beautiful product, Budhayan. However, the question is the people who may have OPD cover from their corporates, or they may think about what expenses I'm having versus what kind of consultations I'm having. So, what can be the common guidelines that you will advise to users to decide whether to take this cover or not, whether to take this cover for themselves or as well as for their parents or in-laws? Any sort of
Right.
calculations?
Right. So ideally, we can sort of address this question in a way that if I'm covered by my corporate also might allow medical bill reimbursements. Now, OPD is a market where a lot of insurers have run into a lot of losses. So we tried to digitize the program, that it can only be availed through a cashless facility that sort of controls the fraud aspect. I'm not saying that each and every alumni will do that, but overall, if you look at the claims ratio in the OPD market, there are subsequent frauds and a lot of bills getting submitted which do not get sort of passed and all those things. So we have taken that picture away. Taking your question into consideration, if I'm covered by my corporate to a healthy amount of 20, 30,000, that's roughly an average spend on doctor visits and diagnostics across a year. You might not look at it. But then if I'm regularly visiting doctors, I'm so MD level doctors, and I'm paying 2,000 rupees, 3,000 rupees per visit, and they are renowned doctors, and my diagnostic tests are sort of high. I should look at this program because this is a multiple kind of a program. I pay 5,000, I can avail up to 30,000. And for my parents also, I pay 12 and a half, and I avail up to 30,000. I'm not losing my money. I will gain in terms of the coverages. Depends on whether I might be able to use it or not. That might be the bottom line question here. And safer product to have. If I have a chronic illness, I should definitely go for it because I will go through some doctor visit and some diagnostic tests. So it's a no-brainer. If I am on a borderline, where my average spend in a year is 40-50K, my corporate को भी exceed कर रहा है. In that case, then this kind of program will help. Ideally, there's nothing to panic. Once you enroll into this program, if you don't see the doctor of your choice, you can get them empaneled. It takes some time. Everything is not completely digitized at the service provider's backend, hence it takes beyond 24 hours. Then reading of prescriptions is not through AI, so they might take some time, sort of to give an approval that yes, this is a prescribed diagnostic that you can go forward to. So those challenges are there, but at the same point of time, there is no such product available in the market which gives us this amount of flexibility in this space. So completely your call in terms of as an alumni, whether this suits your bucket or not. This is an add-on product. This is not an attachment product like the GPA, which comes with the super top up. This is a separate new product available for you, and you pick and choose whether you want to go ahead with it or not, depending on the points that I stated.
All right. I'm sorry. Can I go to the doctor and let's say just do the visit through consultation through the cashless visit app, or I have to mandatorily uh, do the appointment on the app and then go? Is it, does the
So
doctor
in
have a
yeah,
feature where they can like enroll me on that visit app?
so ideally, suppose I've walked into a doctor, and the doctor prescribes these are 5 tests that you need to go and get it done. In that case, I simply can't get it done as a cashless. I will have to register the prescription through the app, and then the approval needs to come, and the cashless letter needs to come. And it takes normally 18 to 24 hours for those kind of approvals to happen, which I was saying that it's not AI based. The prescriptions are read by human beings. So in those cases, there might be some delay. So immediately I can't, but then once I have the cashless letter and approval, I can basically pick and choose where I want to go and sort of get it done.
Okay, so essentially there's a cycle of cashless
Yes,
being approved on the visit app, and only then I can go
correct.
and
Correct.
do it as cashless. All right. I think good enough questions. We can move on to the next slide.
Right.
I
So now, yeah, this is the most important slide for us to understand in terms of whom should I get in touch with. For OPD, Aditya Birla Health Insurance, there is a contact for Super Top Up, and GPA, there is a contact from CARE. But ideally, I would request you that you have 4 levels from Zopper. Level 1 is Rishabh and Pradeep. Pradeep is our claim support guy, a very important cog in the wheel in your point of context. Rishabh, normally for product and enrollment support. Ritik leads the team of Rishabh and Satyam, who are also part of this call today. So you can reach out to Ritik as well. Sujit and Mohit. Sujit is my zonal head operations and placements, and Mohit is my zonal head sales. You can reach out to both of them on Sujit on claim support. So escalation level of Pradeep is Sujit, basically, in case you need to reach out, and escalation level of Rishabh and Ritik is Mohit, and I remain on the 4th level for both product and claim support for any kind of support that any one of the alums would need. You will have this presentation, you will have our contact numbers, and looking at our contact numbers, you should be sort of happy because nobody provides the contact numbers in these kind of scenarios. We do, because we value the kind of association that we have created, and since last 4 years we have been providing service accordingly, and we are connected across multiple groups as well within IIMK. So do not hesitate to get in touch with us. We will sort of help you sort out your issue or claims issue or whatever you have.
sure.
Next slide,
Thanks for
please.
that. So essentially,
Yeah.
it means that in any case, whether you intimate hospital or insurer, mandatorily you should intimate Zopper so that you get timely help and you don't get entangled in the hospital and insurer uh, kind of communication.
Yes, very true.
Right. So next, I think we have the demo of the platform, because during the enrollment phase, many people face problems, issues in terms of keep on asking questions around several fields. So let's have a demo from Mohit from Zopper. Mohit, thank you.
Yeah, thank you, Piyush sir. Hi everyone, good evening. So I will not take much time on the demo because it's a very simple platform that we have created for the alumni who can go and enroll into the program. And the only, guidance from me would be before you start enrolling into the program, please collect the documents for all your PDs. You don't have to, upload the documents into the drive, but at the same time, you have to declare all the PDs. So it's better you do your research at your home, ask your family members about the PEDs they had in the past or they are currently suffering from, so that it saves your time when you go and complete the enrollment. So I'll quickly take you to the demo. So this is the IMK alumni website. So to begin the journey, you'll have to go to the alumni.imk.ac.in. This is the first page. You will see this page. You have to log in into the portal. So please remember that logging into the portal is a requirement. It's mandatory. Until you are a part of the IMK alumni portal, you cannot be a part of the Zopper program. So you'll have to log in into the portal and then you can go into the Zopper program. Since I am not a member of IMK, so I'm not able to log in, but I'll quickly take you how once log in into the program and click on Zopper button. So Zopper button, click to enroll button, click to go to the insurance button will be available at the home page only. So once you log in, you will see that button, and once you click it, it will take you to the Zopper portal. So this is the Zopper portal. So this is how the enrollment portal will look for you when you enter into the program and you are a new enrollment. There are two options available. One is the super top up new enrollment. Second is the OPD plan. You can either start your journey with the super top up or you can directly go to the OPD as well. Please note that these two programs are not linked to each other. So you can choose any one of them and begin your journey. So first you click on the super top up to begin with. Now this is the home page. Now these are the details that will get you from your alumni portal. So these will be pre-filled generally, or you can modify it as well if they are not coming right as per the portal. So you can change the details as well. Like I can add my middle name. Might be it's not there in my IMK portal, but I can change it. Please note that the name should be as per your government ID proof. So better please cross check this once. Then your email ID, you can either have the email ID same as what's there in the IMK portal, or you can use a different email ID as well for the policy issuance. DOB, Indian number. Indian number is a requirement because as per the insurance, the insurer need an Indian number to reach out to. If you're based out of, if you're not based out of India, you can use any number of your family number. Just the Indian number should be there. And then WhatsApp number, you can use any nationality WhatsApp number wherever you can, add it and you can use it. Or you can keep your Indian number as your WhatsApp number as well. Moving ahead, then the address, PIN code. Next, this is a small disclaimer regarding the IMK. Moving ahead. Now, this is an important page because this is where you will have to select your family members. So you can select your spouse, your children, up to 4 children in the Super Top Up program, your parents, and your parents-in-law. Also, please keep in mind that there is a policy information repository as well. So once you click on the policy information repository, it will take you to the page where you can see all the details about the program. So you can go through it, you can go through the FAQ, you can go through the brochure, you can go through the documents related to the Super Topper program, documents related to PD declaration guide, how to declare the PD. So everything is available in the policy information repository. For the sake of time, I'm just selecting few members. I'm selecting spouse, one child, mother, and say father-in-law. I'll proceed ahead. Now this is my details. Now you see this is a very interesting list. This is the list of conditions if you're already suffering from or suffered in the past, you're not allowed to enter into the program. You or any of your family members who is suffering from or suffered in the past is not allowed to enter into the program. So these conditions have been clearly explained by Budhayan sir as well. So I'll move ahead. Also, now this is the one more important thing. This is add PD. So you'll have to declare all your known pre-existing conditions. Say knee surgery, start date, maybe it was operated in 2019, end date remains the same, or I can choose to ignore the end date in such a case. Then say diabetes. Now diabetes is a condition which is ongoing, so there will be no end date. So probably I leave the end date as blank. I don't have to enter anything. Then say hypertension. Again, It will be an ongoing condition. Also, if you don't remember the dates exactly, approximate dates will also work. The majorly the insurer just wants to check for how many years the disease has been going on. So if you don't remember the exact date, that is also okay. Also, there is a guide to declare PDs. So you can go through it. I would request everyone to please go through this guide to please check what are the PDs you should declare and what are the PDs you should not declare. Please go through this. This is very critical. Please note that if anything is missed, just a sec, I think the screen is not visible. Yes, sorry. So yeah, it's very important to declare all the known conditions into the program. Please know that if you miss enrolling, mentioning the conditions during the enrollment, you're not allowed to edit the PEDs during the renewal. So it's very important that you keep these points in mind. Then I click on proceed. It states that there will be underwriting check based on my declaration. So what will be the underwriting check? The underwriting check would be that the insurer will just check the PDs declared are not part of the negative list, the list above the PDs. It should not happen that someone clicks no on say chronic lung disease and then declares a COPD in the PD. So it should not happen such a way. That's why there is an underwriting check. I click on proceed. I move ahead. I enter my spouse details. I click on proceed. Now to show a scenario, I'm just selecting, say one chronic condition into the journey so that you can see how it looks like when you select a negative list condition. So I'm selecting chronic liver disease. So you see it, there is a pop-up, there is a warning that since member has a pre-existing chronic disease, member will not be eligible for the policy. I click on proceed. And you see, based on your health declaration, member is not eligible for coverage under the super top-up plan as per insurer underwriting guidelines. However, the remaining eligible family members can still be covered. I click on proceed, then nominee. So nominee should be as per proposer. So nominee is only for the proposer. Say I am the proposer. So the nominee can be my spouse, can be my mother, can be my father, can be my daughter if she is above the age of 18. So anyone can be nominee. So nominee is for me. The relation of the nominee should, be dependent on me, on my relationship with the nominee. So I select my mother. So my mother details were already there. So it got pre-filled. Now you see, mother is not eligible for the program because she has a chronic condition. I click on proceed. Now this is a page where you can select the sum insured and deductible. This is again a very important page. You can play around. So the premiums for the plan are not available anywhere. The only way to check the premium is that you'll have to go into the portal. And you can play around over here. You can select different sum insured, different deductible, and the premiums will come in. So you can play around it all and you can see which is the best combination for you. Also, if you look at the 15 lakh deductible, the premium is 7429 and 5 lakh deductible is 9100. So you see the difference is not very high. So I would recommend, going around all the deductible and some insured options so that you can understand what is the best fit for you. Also, as explained earlier by Budayan sir, that there is a 50% capping for the modern treatment coverages. So this is a declaration that you will have to accept. That you understand that there is a 50% capping on the modern treatment. Over here, you can check all the details about the policy, all the coverages. Then this is a GPA rider. So GPA rider is automatically pre-selected. If you don't want it, you can click on no. Otherwise, you'll have to click on yes. Also, to select GPA for your spouse, it's mandatory that the self needs to be covered. So without self, spouse cannot be covered. We'll have to click on proceed. Then I select the sum insured for my parent-in-law, say 50 lakh sum insured at a 5 lakh deductible. If you see the premiums, only 18,514 rupees, excluding test. For a male father-in-law, age group 61 to 65, which is a very higher riskier age group. Then the premium what I'm paying is 18,514 only. I click on the declaration. I proceed to policy summary. I have to enter the PAN. It takes 5 to 10 seconds to load the next page. So this is a real-time check that is happening at the insurer end. So this is the first time that our portal interacts with the insurer portal. Our portal is end-to-end integrated with the insurer portal, which means that if there is no PD declares, the policy issuance will be real time. You will get the policy copy in 4 to 6 working hours. If you have declared a PD, then it will go for underwriting check, which can take 3 to 4 days. Now you see all the details are coming up in the summary page. Even the PDs what I have declared and the entire premium. Now, if you see for a family of self, spouse, and children at a 75 lakh sum insured 5 lakh deductible, including a GPA plan, the premium is only 9,000 rupees. And for parents-in-law, the premium is only 21,000 rupees, which is much, much competitive than the market. I click on confirm and I pay the premium. You will be redirected to a Razorpay portal where you have to complete the enrollment. So once you complete the enrollment, you can go back and select the OPD program. So the journey of the OPD program remains the same. Only thing is, since in the OPD there is no PD declaration, there is no negative list, you have to just enter the details and purchase the policy. That's it. You have to just enter the details again. That's it. So sum insured there is no deductible, only sum insured. The sum insured is already selected. I click on to proceed summary and the payment page is there. So it takes hardly So it takes hardly 5 minutes to complete the OPD program and 10 to 15 minutes if you are aware about the your PDs in the super top up program. So the way we started off this journey was that when this is a journey that we want to create when you're sitting in your when your flight is about to take off and you have 10-15 minutes so you can complete your journey in that time. So this is how we wanted to create this journey, and ideally it takes that much amount of time only to complete the journey and you make the payment and you get your policy copies on your inbox.
Thanks,
All
Mohit.
right. Thanks, Mohit. I think we have completed the session. Now we should ask questions which are not answered and are there on our channel. So we will now start flashing questions that are important. The first question is around it's Imranal. Question is a parent who was operated for a heart angioplasty in past and pyeloplasty for urethra. Unsure if these are considered in chronic disease where insurance is not applicable. We answered that, but I think let's take it elaborate because it is important. So we would like to repeat. Budhain?
Yeah, so heart angioplasty last year was a part of negative list, but fortunately we've been able to improve the negative list this year. So it is not a part of negative list this year. And pyeloplasty for urethra, as far as my medical knowledge goes, also does not come under the negative list that we have sort of declared. So taking both into consideration, yes, the parent can come into this program.
All right. The next one is from Renal. And this one is, what is the process of informing the TPA when hospitalized? Are they clear with this? Because usually we share the insurer details during admission.
Yeah, so the process of informing TPA in the case of cashless would be that you would go to the cashless or the TPA or the insurance desk, whatever is named there. You would submit, you would choose a deductible in the program. So you will have to submit payment receipts or proof of payment up to, and maybe the discharge summaries also to prove that these payments were made against those discharges. And up to a deductible. Say, for example, if your deductible is 3 lakhs in the question, you pay up to 3 lakh, you submit your payment proofs up to 3 lakhs, submit your current documents, and then ideally they file a claim through the portal to the insurance company. What you should also do, as Piyush sir added, that you should get in touch with us and we will help you smoothen up the process in case if anything is required there.
Does it also cover OPD and daycare process? I think follow-up question from Nal only. And how do you
Yeah,
inform the
no. So OPD, if you see OPD as a separate product, you would understand that OPD do not get covered in inpatient hospitalization things and all. So you can cover any hospitalization or any diagnostic tests, basically, which has an active line of treatment. Like if I've got admitted for a heart surgery and then I do some diagnostics pertaining to that, then that can get covered. But normally the others do not get covered. So OPD is a separate product. And daycare procedures, yes, there is a list of daycare procedures. We can share it with you. All known daycare procedures are sort of covered. How do you inform Zopper? We have shared you a matrix of 4 levels with our contact numbers. There's also an email ID, which is imkhealthplan@zopper.com. You can park an email there. You can reach out to any one of us.
All right. I think another one from Mrinal, and this one is that, can I get admitted in a non-care hospital, which maybe the employer insurance covers, and will the super top-up be applicable?
So, in case of non-care registered hospital, you mean a non-network hospital of care? Yes, you can, and then you have to pay the amount, come back and get it reimbursed. That's the option which would be available to you. So
now
ideally,
after?
there is one
Sorry.
small thing, I'm sorry, Piyush sir, which I would like to add is that in certain scenarios, if you know that the bill amount is going to be big, preferably choose a care network hospital because that's the maximum impact. First, you pay, say, 10 lakhs or 12 lakhs, 15 lakhs from your pocket and then come back to reimburse. You can actually pay 3 lakh deductible and then, come to care to claim this and then stay in a. So basically, you can reimburse 3 lakhs that you pay out of the care network hospital, which might not be part of your corporate or a base hospital list. You pay 3 lakhs and then the rest moves cashless. So use that and we can help you, sort of understand the problem or tackle the problem better that way.
So after
Piyush sir, you
asking,
asking.
yeah, saying after asking several questions, Mrinal now is eligible to be a part of the volunteer team. So Mrinal, contact us. We will be happy to have you. Next question is from Mr. A. Verma. How is the premium for parents calculated? In the payment section, we get details, but any idea about that?
Yeah, you'll have to choose the sum insured and the deductible for that, and then the premium will appear. So I'm sure that if you go back to the page and choose the relevant sum insured and deductibles and change them also, you will see the premium changes. So everything is digital online.
All right. The next one from Gopal Krishnan. This one says, if I need only super top-up for my parents, why does the portal marks mandatory for base policy? So I think we'll need to first clarify that there is no base policy on the portal, and I'm just handing it over to you, Budhayan, to clarify.
Yeah, so I think Piyush sir would love to answer this. Piyush sir, you want to answer this question? Normally you keep giving this answer, so I hand it back to you.
Okay. So base policy, essentially base and top up are very, very different. Here, I think what Gopal means is base means alumni and family policy. So it is important to cover alumni and family, because if we if insurer gives that permission to cover only parents, I guess we will get only enrollment for parents, which will make it very, very risky. So reason one. Reason two is we would like everyone to cover themselves up from the perspective of IIMK AA. This is an exercise we should start doing exercise of covering ourselves today itself, because after 10 years down the line or 15 years down the line, we all are going to be old, and we are all are going to be very, very risky. So from both the sustainability and profitability for the insurance company, it is mandatory for us to cover ourselves, whether we are in India or outside, and then take the policy for parents.
Basically, alumni is the proposer. So without the proposer, there is no policy.
Right. That is the legal part. Yes. Thank you,
Yeah.
Kiran.
All right, let's move on to the next one. Do critical illnesses get covered under the policy, or does that require buying a critical illness insurance separately? So he or she is not referring to PED, but they're referring to coverage of critical illnesses in the policy.
Yeah, anything that I contract after getting into the program is covered. There is no exclusion in terms of that.
But if you have it prior to entering the policy, then it is an exclusion list, then you cannot enter the program.
That's right.
So next question is around our non-network. I think we talked about network, but in B towns or small towns, are those covered by the policy? That
So
kind
the
of
best
answer.
way to check would be Google Care Network list. You would find three parameters. It asks for your city, and then it also goes into which part of city. So when you zero down on that, it will throw up the listings of hospitals which are there. You can do that. Takes 3 to 5 minutes, and you would completely understand how are they covered.
And just to add on to that, so non-network hospitals, if you already know it's a non-network hospital, you can always go for reimbursement.
Right. That's right.
All right. Next one is Ayurvedic and Homeo covered in both OPD and hospitalization policy. I think we did answer it on the chat as well. But Bodhayan, over to you to answer this one.
So, Ayurvedic and Homeo is not covered in OPD because they will not fall under doctor consultation or diagnostics. These are the only two categories. In the hospitalization policy, Ayush is covered. So, from that perspective, it has to be a government registered hospital, and all those conditions being met, it stands covered.
Okay. I think this probably may be the last question. What is the claim paid ratio for the program over the years? I would like to take some step. I think there was one more question also on DM. How is the claims experience? So I think this question should be answered by people who claimed, but probably we can, as a group, we can shed some light on the claim paid ratio as well as the claims experience. So, Bodhayan, would you like to uh, give feedback from your perspective?
Yeah, so it's a chicken and egg kind of question because on one side, if the claims ratios are sort of humongously paid, in that case, what is very very interesting, it would be that the premiums would go up. So if my claims ratios are upwards of 110, 120, 140%, then there are high chances that next year my premiums might go up. In this case, I would say that it's been 3 years. This is the fourth renewal, and the claims performances has been satisfactory, roughly between 60 to 65% on an overall, and industry average is around 110 on the medical insurance perspective. There are a couple of safeguards that we have planned in the program. One is that small negative list. but also the fact that there is a 1 year wait period on the pre-existing diseases. New members coming in every year with a 1 year wait period sort of balances it out. And a lot of people who are sort of claiming it, doesn't only hit the program. New people who come in with a 1 year wait normally do not claim within that first year. So as long as the answer is yes, the claims ratio has been satisfactory between 60 to 65% roughly last year. Based on that, we were able to bring in with a couple of good improvements and new additions in the Super Topper program, and without increase in premium. Having said that, difficult to predict the future claims ratios. As long as we are adding more population, more new population to the program, the chances of the program remaining sustainable and successful always stays.
Okay. I would just go a bit back. I think you mentioned some percentage claim ratio for others is like 100, 110%, while at IMK it is 50, 60%. Do you mean to say that only 50 to 60% of claims are paid, or does it mean something else? I think that because
Yeah.
that is a
So
industry term and might confuse people out. So let's clarify that a bit.
yeah, so I'll explain. So when I talked about 110, 120, that's a combined ratio. So it's called COR. So one is the LR, which is the loss ratio or the claims ratio. Then comes the combined ratio and office cost, people cost, and all add to it. What is basically, so an insurance company in the medical insurance perspective spends or sort of gets 100 rupees and spends 110 to 120 rupees. So basically, they're spending 10 or 20 rupees from their pocket. This is an industry perspective. But the industry perspective is based on all the group corporate programs that we talked about, all the retail programs that we talked about. The way we have crafted the program seems too good to be true, but the kind of checks and balances that we have built in, and this being a super topper program, when initially the first part of it is borne by some other insurer, or that up to the deductible part of it is borne by some other insurer, 1 year wait period on the PEDs, and at the same point of time, a small negative listed entry. These all have been the right guardrails, which you also talked about, that we have put in adequate guardrails in our program. So the way the program stands designed is how the program is performing, which necessarily does not mean that we are only paying 50% of the claims. That was a good question, because we are paying 100% of the claims. At the same point of time, there are a couple of claims which get rejected on less than 1 year PED not disclosed. So those are certain categories which are there, but then we will not count them into in terms of a payable claim. So 100% of all payable claims have got paid. That's also another success ratio where I would like to present to you.
Right. So that
And
means that,
yeah,
sorry, that means we are paying claims. The claim amount is almost 30% of the premium that we have collected. While
yes.
number of claims wise, we are paying almost all the claims except one which are either less than deductible or non-payable because of one or the other reason.
Yep.
So
That's right.
I
we have,
think what's important for the alumni to know is that all eligible claims were paid, and the ones which were not eligible were either because the deductible was not met or there was some other ineligibility reason, but all eligible claims were paid.
So
last
this is
question.
by far the best insurance program that any alumni, any IMK alumni can get. My 2 cents before Piyush sir goes to last question is, do not even think, you are not going to get it anywhere. Just go to the enrollment platform and enroll, and use the rule of thumb in terms of 10 years down the line what you would need, choose it today. That's the bottom line.
Yeah. I'm not
Piyush
sure
sir,
who will
over to you.
answer the next. I'm not sure who will answer the next question.
It has to
Kiran,
be
you want to
Piyush.
take it? Oh, all right. So, Abhishek, is there a plan to start the base health insurance, not just top up? So, we are working on base health as well as on term insurance. We are in the final stages. However, there are a few terms and conditions which are still remaining to negotiate. Once those are done, we will announce. Till that time, no promise. So, that's the answer.
All right. So I think with that we can bring this to a close. Thank you so much for the high and thank you so much as Opera team for taking time out. And thank you everyone for joining in and for having your trust in us to keep your families safe and insured. So if you have more questions, please feel free to continue asking on the chat. The PPT has been shared on the Google Drive, so you can log in and also see the contact details of the entire Zopper team. You can reach out to them. You can reach out at the email ID given. And of course, Piyush, myself, Anchit, and all the other volunteers are already there in the WhatsApp groups. So you can also ask more questions on the WhatsApp group. So with that, I think thank you again, and we will end this session.
Thank you.
Thank you. Thank you, everyone.
Thank you, everyone.